Hello, everyone. Welcome back to the Miguel Sanchez world. Today, I'm going over old banks versus new banks, right? So, we're seeing right now the world is finally realizing what banks are and what their business model is. And now we're all looking at our banks and saying, how safe is our money inside of banks? So, what I want you guys to understand is the old world of banking, traditional banking, and the new world of banking, which is called decentralized finance, right? So I want you guys to understand all the parts of it and to start to understand them and start to try to use them because this is a major shift in history that was already underway, but now we actually as a global community are now in a position to actually use these new technologies and make sure that our money is safe, And again, I'll talk to you about all the risk and everything, but the truth is if you're thinking about if you're worried about your bank and how safe is your money, if you have under 250K in a bank, you're pretty safe, right? So that's one thing that, I know it's a certain level of person, but still, even having your money in a bank, there's many different things that most people don't understand about the banking system that I want to basically make sure you understand, right? So if we look at the differences, let's just start with the differences. So a regular bank, you put your money in, they take your money, they lend it out, and they have about 10 to 20% of actual customers' money on hand at all times, right? So the difference between a traditional bank and a decentralized finance bank is when you put your money in a decentralized finance bank or you hold your own crypto, you have access to 100% of your money at all times. Okay, so that's a major difference, right? Because the business model of old banks is bring your money in our system, and then we are going to use it to try to make as much money as possible. So because of that, we don't really have your money on hand. We need to use it in other things, and that's what just kind of screwed up the economy, which is they needed to put their money into bonds to make more money because that's how they make their bonuses and everything. That's their business model. And then the interest rate on the bonds of the new bonds that were being created were higher than the old bonds. So what that means is when they needed the money because people wanted their money, they needed to sell the old bonds and they were going to lose money, like billions of dollars. And that's what happened. That's what happened with the bank runs. When people start taking out the money, there's not enough money in the banks. So banks go out of business because your money is somewhere else. When you give your money to a bank, it's no longer your money. It's an IOU. So when you give your money to a bank, they're lending it out. They're investing it and much more than you even have. So when you need it, they can't give it to you as fast, right? So that's old world. New world, when you bring your money into a crypto bank, unless you want to do other stuff with it, which you can, your money, your 100% of your money is there at all times. So if you need it and you need to pull it out, you can do that without having any issues. In 1 second, you will have your money. So that's a very big difference. Of course, there are differences in where that money is. And that's where, I'll go through all that. But the truth is, access to it is instant versus access to your money in a bank is not instant, right? Because maybe have heard of situations where people go into a bank and say, hey, I want to take out a certain amount of money. And a bank will say, you need to give us more heads up than that. You need to give us a few days to take that kind of money out. I've heard as much as $25,000. The bank is like, well, I need a few days to be able to take that. I haven't had that situation. I've taken out big chunks of money and not had that situation, but I've heard more and more recently that is happening. But this was even before what just happened with the bank runs. So imagine going into your bank trying to take out the money. One lucky thing is now you can just wire the money out. But again, that's not instant, right? There was a big problem last week with a lot of companies trying to wire money out and then the bank closing and their wire never went out. So luckily the government bailed out the banks. Okay, let's not call it a bailout because technically there was an insurance in place to protect against these things happening, and that's what they're saying they're drawing on, this insurance. The problem is, I don't believe that there's no way that we are not going to feel the extra fees that are going to be needed to cover these costs, because insurance is a monthly bill, right? If you get into a car accident, your insurance goes up, right? So I believe the insurance premiums on the banks for this new insurance is going to go up. And what does that mean? They're going to have to charge the customers more somewhere to pay that higher insurance, right? That's business. Whatever our costs are, the customer has to pay it, or this is not a business. And of course, banks are very, very good at charging customers, and that's why they make so much money. So they're definitely going to figure out how to make us pay for that, in my opinion. So that's the old world. In the new world, crypto makes money. Crypto banks make money because they also lend your money out. If you put your money in a crypto bank, they also lending your money out, but they're lending your money out at a lower it's called over collateralized loan. So like, if I wanted to borrow $1,000, I need to have more than $1,000 in the bank. So they have no real risk, because if they lent you that $1,000 and you never pay it back, they're going to just keep your money. So they can't really lose, right? So they do make money on borrowing and lending, but they don't take your money and invest it somewhere else. And when we talk about crypto, there's a big thing that I always want to say. Everybody thinks of FTX and says, "Oh yeah, but look what FTX did." FTX was not true crypto decentralized finance. Decentralized finance means there is a public blockchain with the wallets of these organizations, so you can see what they're doing with the money. Traditional banks, nobody knows what's going on with the money until it's too late. Not even the government. So, well, in some cases, like, so for instance, with this SVB stuff, just 2, 3 weeks ago, SVB was rated one of the top banks in America. And they were checked, had a clean bill of health, and everybody was like, this is an amazing bank. Within 2 weeks, it's gone. Right. So again, and I know for a fact the people who banked with them, the startup founders, the VCs, did not know for sure how bad their situation was until it was almost too late, and most people, once it was too late. When you look at decentralized finance, they have 24/7 you have 24/7 access to the data of that bank, and you will know what's happening with that bank. And again, us as users, we are not only users, we are also investors in the bank, and we get to vote on what happens in the bank, right? So the idea of traditional versus decentralized is you have access to the data, versus in the old world we have no access. We don't know what's going on, so we have to hope that the government and the banks are doing what they have to do for us, right? So that's a major deal, right? When you look at what has happened in the past with 2008, and now, those things happened when the banks were left to their own devices and were trying to make as much money as possible. And then what happened was, after 2008, laws changed to make them not do as much of that kind of stuff, right? So they were supposed to not be investing as much of users' funds. And what happened was, not to get political, but when Trump came into the office, he changed that law. So he made it so the banks could again go back to doing more risky stuff with your money. And that's what happened. Basically, as soon as they were able to, they went in further to make more gains. But then what happened was COVID started to make it where we needed to print up a lot of money. So those banks became risky in what they invested in, right? And then it all came to pass this last few weeks. So okay, so those are two major differences. The fact that they're so public in the data on the decentralized finance world, that's why it's decentralized. There's no one entity or one person that could control what everyone sees, versus old banks, that is 100% what happens, right? Like, we don't know what's going on with a traditional bank at all until it's out of business and we find out the true story later. And that's major different. All right. So what type of financial products and services are available on decentralized finance versus traditional finance? Traditional finance, they created all the services that we look for now, right? You get interest on your money. You can borrow against your money, or they'll give you loans for homes or businesses if you have good credit, right? Um, of course, there's high money market accounts that you could put in that get you more interest. They have customer service, right? You can walk into a bank and you can talk to someone. So that is a huge thing to a lot of people. People like to have a physical location that they can go to and speak to somebody or call somebody and say, hey, my bank account has this issue. But a lot of times, the reason it has those issues is because of its centralized nature, right? They're trying to stop you from doing stuff because, again, there's laws that they may want to like make sure you're not doing anything illegal, right? So again, the traditional finance system is based on a lot of laws that were created to make sure our money's safe, right? So, and again, we're not doing anything illegal. There's anti-money laundering laws. There's what is it? Anti-money laundering and KYC, which is know your customer. So that means for the government, they want to understand you're not a drug dealer, you're not a terrorist, right? You're not bringing in money and using it illegally, right? Because many banks have gotten in trouble for looking the other way for certain customers, right? So that's what traditional banks have. In the decentralized world, and this is where they come into scrutiny, is they don't have anti-money laundering, they don't have KYC, because it's just code. You put your money in and you take your money out and you do what you want. They don't even know who you are. They only know the wallet address. So traditional and the media says, oh, these are all, everybody using it is drug dealers and terrorists. But that's not true, right? It's like impossible, because one of the ways that you have to get into decentralized finance is you have to bring your money through a KYC AML crypto company. So a lot of times when I teach people through retire your bills, we teach them to go through Coinbase, because Coinbase is anti-money laundering and have a KYC. When you sign up for Coinbase, they ask you to put your ID. They ask you to put your address, your social security. That is KYC. They know who you are. And then they make sure that your bank relationship is also covered, because to create a bank account, you need to do all those same things. So you got the double redundancy on KYC and AML on crypto. In the traditional bank space, they just needed one time because they're doing everything there. But the differences are, if I wanted to take out a loan. So this is what I teach people on the Retire Your Bills, retireyourbills.com, is if you wanted to take $100 loan from yourself, if you had a $300 deposit in your bank, you can't do that. You can't go to a bank and say, "Hey, I got $300 in my checking. Can I borrow 100?" They won't do that. They say, "No, take out the 100, pay the fee to take it out, right? Whatever, either if it's at an ATM, you're going to pay the ATM fee if you're not in your current bank. But if you are in your current bank, you don't pay the fee. If you go to the register, you don't pay the fee." With crypto, there's fees on the blockchain, and there are fees on the platforms, the different platforms, but they're very, very small. Like, I'm talking about pennies, right? Because to run a blockchain, because it's decentralized, everybody running it and using it is basically an investor in the network. So by us using these blockchains and these protocols, which are all open source, meaning anyone around the world can look at the code, help the code be better than it is right now, and get better. We are not only the users, we are also the owners of these platforms, versus The traditional banks, we don't own anything. Even if you buy stock, you don't really have a say in anything, right? You could be a part of, if you have a certain amount of stock, you could be a part of the votes. But in the decentralized world, you are literally the vote. Like they vote, and whatever the community votes, the community gets. So last week, when everything was going down, USDC had a problem, and the community that night voted to pause USDC in certain places, not even everywhere, just in the places where it had the most risk. And it went through in less than a day. In less than 24 hours, there was a vote created and a vote voted on that chose to protect the customers, right? And the customers made the vote. So that is a huge deal. If you really think about what's about to happen, they're going to raise fees on us because now they got to pay this higher insurance premium. If it was in the traditional finance, I mean, if it's traditional finance, that's just the CEOs making that decision. If it was in the decentralized finance world, we would be making that decision, and we would say, okay, explain to us why the rate should be this rate. Okay, that makes sense because we want this to exist, so we're willing to pay this much more, but it shouldn't be that much more because, again, here's the major difference of traditional and decentralized finance. There's no real people at the top getting billion-dollar bonuses by just charging an extra percent or two. That doesn't happen because, again, it's all very public how everything works. So we get to see how everything is. So if we see, hey, they're raising this so this one person could get a bonus, you can literally see everything. You can see what happens in their wallets. And again, depending on how technical you are, where I basically rely on the super geniuses to go through the blockchain transactions and tell me on Twitter mostly. And then we vote based on what we see. But it's still public. It's not that it's not accessible. Yes, you may not be technically as proficient to go look, but there are people that can. Versus in the bank world, unless you work at the bank, there's no way you're going to have access to that data, right? And you're a top level person at the bank. So the amount of people is very small that would know if the bank is in trouble. So another big thing that happened last week or a few weeks ago was the top level people at Silicon Valley Bank started selling their stocks, sold millions of dollars worth of stocks. So the idea around the space is they knew what was happening, and they knew they were about to go out of business or go down tremendously in stock value. So they sold their stocks before it all went down, and that is technically illegal, but somehow people get away with it, right? So again, that can't happen in decentralized finance because we all see what's happening. We all see the macro environment, meaning the whole world, how the finances of the whole world are going, and we can see directly what's happening with that specific platform that you're using. So that is a big deal. That's a big deal, right? So okay, we spoke about that. We spoke about the fundamental differences. We spoke about the different types of financial products. Okay, so on decentralized finance, you could do all the same things in a bank. The difference is, all right, so not all. There's nobody to go in and speak to. You can't walk into a decentralized platform bank because they don't exist. That's part of why the fees are less, though, right? A lot of what traditional banks have to charge for is because they need to pay for all these people and all these locations, right? So when you pay for a bank, you're paying for that overhead. When you pay all those fees, if you're paying fees, I'm sure everybody's paying fees in some way. You're paying for the access and the amount of bodies that they need to run this bank. Again, some people higher paid than others. Some people way, way, way higher paid than others. So that's where, do you get to decide how much this person's salary is? No, right? This person could be making $100 million a year, $250 million a year, and you may not feel like that's worth it. But again, you have no say. Versus in decentralized finance is all code, so there's actually nobody that works on that level. There's developers that provide code to the to the open source platform, and they get paid in their own ways. Aave is one of the banks. Compound Finance is another one of those banks. They do have people on salary that add to the code, but they have a token structure and all these different things of how they make money. Of course, they have fees on every transaction, which makes sense. The blockchain also has its fees, but you can make a loan to yourself at a sub 3% interest rate in a second, versus going to a bank right now. The interest rate is much higher than that, and you have to fill out all kind of paperwork. You need to see if you have good credit. You need to see if they will let you do it, because again, there's been historically different treatment based on what you look like and what race you are in banks. They've even found studies where minorities had higher interest rates or didn't get improved at all for loans. And that again doesn't happen in decentralized finance because it's code. They don't know who you are. They're not racist. They don't care. As long as you put your money in and you borrow against money that you put in, they can't lose, right? So that's a big difference. So all right, so the interest rates. Let's talk about the interest rates, period. So interest rates on a traditional bank, again, they're based on some external factors. A lot of times it's not even based on what the bank gets to decide, right? So for instance, the Fed sets up the interest rates. So the Federal Reserve, you don't know what that is. That's another entity that's not it's not an American company. That's like its own world bank. They decide what interest rates are in America, and then the banks have to charge on top of that. So what's happening now is because again, the Fed, again, this external entity which creates the money, they are the ones that printed up all this money, and then they raise the interest rate. So now all the banks raise their interest rate. With decentralized finance, the old world is not connected to the new world as much. We did see one connection, and I'll go over it in a few. So the interest rates have nothing to do with what the Fed wants. So when all these interest rates were going up and up and up, the interest rates on decentralized finance stayed the same, at least from the platforms I teach people how to use, right? So I've kept the same interest rate, sub 3%, sometimes a little a little bit more than three, the entire time, through the ups and downs of crypto, the ups and downs of uh banking failures and stuff like that. No up, not very little ups and downs, not like double, triple interest rates like what was happening in traditional finance, because there's all these external factors that control it. Versus when the interest rates raise on decentralized platforms, we are the ones that decide that rating. And it's based on that interest rate, and it's based on the health of the platform, right? You don't want the platform to go out of business. So you got to understand sometimes there may be times where it's like, you know what? We should up this interest rate by a percentage to protect our platform, because we're better off if this platform exists than if it didn't, right? And again, I haven't even seen that happen yet. And crypto has gone through the ups and downs worse in history, and I still haven't seen it. So to me, I think we're pretty good there. And then when you think about access to it, when we talk about traditional banks, America kind of leads the way, right? Like what just happened in America is starting to have a domino effect across the world. Decentralized finance is the whole world, right? So it's not like one country can set a domino effect. This is everybody who wants to use it around the world can use it, because again, it's globally open source software. It's like nobody could stop you from using it. It's just code that lives on the internet. If you want to put your money in there and borrow against it, nobody could really stop you. So that's where traditional banks, there was a big problem with Silicon Valley Bank, right? Where any global business that was like coming from other countries that wanted to bank in America, especially startups, they were going to Silicon Valley Bank because they were much better at allowing them to do that. So again, when all this happened, all these external businesses were very worried about their money, because that 250K for a startup is not that much. So they were almost screwed over. But again, if through a global open source software, they were able to have their money in a decentralized bank, they would have been okay. So again, once the world understands the difference between traditional and decentralized finance banks, I don't see how they compete. It's kind of like Uber and the traditional cabs, right? Like the traditional cabs, yes, before we knew about Uber or Lyft, they were the only option, right? But then, when you could just type your phone and it knew GPS where you were, it charged you. You didn't have to walk around with cash. It was better for everyone. It was better for the Uber driver and it was better for the customer. And the cab companies quickly lost, market share because it was better for both sides. And this is what I believe is going to happen eventually. I know it's going to take some time because money is different than getting into a cab. People have much more emotional, um, have emotions based on the money. So they feel like I feel safe having my money in a bank. But this is where I believe we just had a real shock to that system. Now we understand how safe our money is in banks. Of course, if you have under 250,000, which is most people, you are somewhat safe. But I don't know. It's safe, but you're still gonna get the interest. I mean, the inflation of every time these banks go out of business or whatever happens, they're gonna charge us more to cover the cost. I don't see how this insurance is gonna cover every bank failure. A lot of banks fail throughout the years. The big difference that happened this last few weeks is that huge banks failed, like top 20 banks. And that's like there's of course thousands of banks across the world, but the top 20 banks, three of the top 20 banks in the world collapsed in the same week. And then one of the top, I think 10 almost collapsed, but a country had to bail them out, a different country. This is starting to get scary, right? So for me, when I create this content, I'm really trying to educate people on the differences. And then I want people to try just put a couple dollars so you can play with that system of decentralized finance and lose the fear of it. I think what happens is right now, of course, the banking industry wants to create fear around crypto and decentralized finance because guess what? It's like the cab companies like, oh, Uber's dangerous, right? And that's where, you have to make your own decision based on your own research and understanding it. So at this point, we'll go over the sponsors. Um, First sponsor is retireyourbills.com, where we teach people how to create their own crypto banks and leverage them to pay their bills and invest. So what we do at Decentral Retire Your Bills is we help you take a bill and invest the same amount of money you pay that bill and pay that bill, right? So go to retireyourbills.com, take the free training so you can learn how to do that. Second sponsor is MetaBronx. MetaBronx is a startup accelerator that also brings you from the community and gives them paid apprenticeships at these startups that we help accelerate. The startups that have gone through our program have raised over $15 million after going through our program. And we are running a cohort right now. Applied if you are a startup founder and you're looking for understanding of how to raise money in the tech space. And then finally, Stack. Stack is the new sponsor. Stack is a program I've been developing for about 6 months now. Of course, I've been working on it in my mind for longer, but Stack is a way to automate investing and paying your bills. So basically, what I teach people how to do and retire your bills, I've created a software that will do it automatically for people. And we are testing with our public beta waitlist people. So if you want to get on the waitlist, go to stackit.ai and get on the waitlist. All right. So next, what role do cryptocurrencies play in decentralized finance, and how does that differ from traditional banks? Okay, so when you put your dollars into a traditional bank, you are basically taking the money you made, right? And that could be in the form of actual physical dollars or just a wire transfer from your company into your bank. But it's still very digital. Like I don't see many people walking around with dollars, right? Like yes, you could have a couple bucks in your wallet just in case, but people are not walking around with their thousands of dollars anymore, or even hundreds of dollars like that often. I barely ever have cash on me. And I do think most people are in that same boat. So, what is the difference between cryptocurrency and dollars in a bank? They're they're both very similar because it is just digits. It's like, okay, $1,000 is in your bank account now. So you see this digital number in your bank, statement. But again, what did I tell you? If you went in, let's say you had $100,000 in your digital statement, and you went in and you said, "All right, I want my $100,000 today." You can't get that. Nobody can get that, right? So how different is that? Yeah, they're gonna need a few days. They're gonna get your money. They will get you your money, but again, depending on if there's a failure, right? If there's a failure, you may need to wait a few days more than normal. But if there's not a failure, you still got to wait a few days. No doubt about it. You're going to have to wait. With crypto, it is the same digital numbers, but where you keep that and depending on what are you doing with it, like if you have it staked in a platform that says you're staking it for a year, yeah, you can't take your money out. But if you have it in a decentralized bank or in just a wallet, you can get 100% of that money instantly, send it to wherever you want. This is where the problem lies, is when you take the money from the digital space of crypto and you try to use it in the real world. Right now you kind of have to go through some type of bank. There's options though, right? Like I teach people in retireyourbills.com, you can go through Coinbase. Coinbase has its own debit card, but there are limits, right? You can't spend $100,000 on the Coinbase card. At least I haven't seen. I think there's like a daily limit, and it probably grows over time. You can't send the money to your bank and create some type of wire transfer or payment. That's still going to take days. And this is where this is going to start changing. After we just saw what we saw, now we're learning, and the crypto space is starting to say we need to create our own banks, because the current version of the bank is kind of limiting what we can do, because we have to have our money in a bank, right? So what happens in the crypto world is, let's say we did that, had $100,000 in the crypto bank, and I wanna spend it. I have to send that 100,000 to a bank, and then that bank does what it does. So it slows me down. So what happened was, there were certain banks that sped up that process. They said, all right, USDC, keep the money in your bank account and we'll settle it faster for you because you have the money and we're in the same bank. So we're going to move that money faster for you because we understand crypto moves faster. But somehow, all of those banks were put out of business 2 weeks ago. So what they're saying in the crypto space is there's an concerted effort to go after what's called the on and off ramps of crypto. An on ramp is how you bring money into the system. An off ramp is how you bring money out of the system. So Signature Bank was one of the biggest ones that did this. Silvergate Bank was another one of the biggest banks that did this, and Silicon Valley Bank was one of the biggest banks that did this. So now, because this happened, the crypto space started to partner with even bigger banks that won't be able to get taken out like that. So I was just watching a video where the CEO of USDC partnered with BNY Mellon, which is one of the biggest banks in the world, probably top 5 or lower, and they have made it so it protects that movement of the dollar to crypto more. But again, what USDC and other crypto companies want to do is create their own banks, because even those top 5 banks are still doing what the Silicon Valley banks and the other banks were doing, which was taking your money and investing it so they don't have it on hand. What the crypto market needs is for it always to be on hand. They don't need for it to be going and being invested even more. They just need it on hand. So by creating their own bank, they can do that. So that's what I believe is going to happen. Who knows how fast, but that's the path everything is going towards. How does the accessibility and user experience of DeFi platforms compare to traditional banks? This is a big one. This is where I would say the biggest problem is. Right now, to use a traditional bank, you can walk into the teller and put your money in, get your money out. You can go to an ATM, put your money in, get your money out. With decentralized finance, you do need to click more buttons than most people are used to clicking. It's not that much more, but it is more. And the user experience is not friendly for everyone just yet. But this is why people like me are trying to build products to make it simpler. But it is not as easy. So this is where, like on retirebills.com, I walk people through it. It's not that hard. But to the normal person that's just used to opening up their Chase app, pressing two buttons, it's not that easy. So people don't want to do those extra steps, but that is the opportunity for most people that are willing to do the steps, because if you are willing to do those few extra steps, you get to unlock the power of decentralized finance, where if you're not, you have to hope your bank approves any actions you want to do. So that's, a pro and con. But the truth is, I can't act like it's not a problem, where if you want to use decentralized finance, there are, and the steps are getting less and less over time, but there is like 5, 6, 7 steps that you may need to take. And it's like, it's a little scary because it's money, right? And if you do the wrong thing in crypto, you could lose your money. If you send your money to the wrong wallet or you lose your password, nobody can help you. There's no customer service in the matrix, right? So that is a problem, and that needs to be solved. And there's many people working on different parts of the problems, and it's just a matter of time before they're solved. We're in the very early stages of all of this. We're talking about everything I'm saying is possible has really only been possible for about a year and a half. That's like infancy stages. But everything that I show people how to do in Retire Your Bills and everything I'm talking about right now, Chase right now is doing it. If you look up Chase, if you put this in Google, Chase, Aave, AAVE, Polygon. If you put those three terms into your Google browser, you will see that Chase is doing the exact same thing that I teach people how to do on Retire Bills. They are putting money into decentralized platforms through Aave on Polygon's blockchain, and they're making payments to people. What does that mean? They are doing exactly what I'm teaching, which is they're bringing the money in, they are leveraging the original money, paying people, and then investing the original part of what they brought in. So if I bring in $1,000 and I got to pay somebody 500, I bring in 1,000, borrow, pay 500. The person got their money, just like when I teach people how to pay their bills. But now I have $1,000 that I can invest in cryptocurrencies that have a chance to grow 5, 10x. So let's say I invest conservative $750 and it 10x's in, whoever knows, 10 years, let's just say. Even if you want to say 20 years, still, that's an amazing return. That $750 would turn into $7,500. That person was paid the 500, but I made $7,500 from paying somebody. Chase is doing this right now, and this is what I'm teaching people how to do with their bill money every month. Think about where you could be if you did this every month, right? Okay, so how do security measures of traditional banks compare to those of decentralized platforms? Okay, security is a big deal, right? When you go into a bank, they got armed guards, they got, safes, they don't even have all your money there, right? Because the money's somewhere else. They bring the armored cars with the money sometimes, right? So people feel like it's safe because unless you're a bank robber, you not everybody is going to take that risk to rob a bank, right? Sometimes they do, but when they do, it doesn't affect you at all as a person, because if they stole $1 million from the bank, it doesn't come out of your bank account, right? So people feel safe with the security that has. Another big thing, if you forget your password, you on your Chase app and you don't remember your password, like a lot some of my family members, um you have to reset it, and you get to reset your password. You could call in and say, hey, I don't remember my password. They can fix it for you, whatever. They'll double check to make sure you are who you are, and then they'll fix it. In decentralized finance, because it is so sovereign and you are in control of your own everything, there is none of that, and that's on purpose in a way, because the reason this was created was, in certain countries, they'll come and take your money, right? Like, they'll say, hey, before you leave, we want to take all your gold, all your cash, right? So if you're running from like Ukraine, what happened in Ukraine when people were trying to leave, there were people robbing them and taking their money, right? Because just people are evil, especially when they can do that kind of stuff. With crypto, the idea is, if you have the phrase in your head, the C phrase in your head, they can't steal anything. You go wherever you go, you log in through your C phrase, and you have access to your money. It's not a physical thing that you need to walk around with where people can steal it, or somebody has to have armed guards protecting it. It is in the cloud, in the digital world, on in a decentralized network. That's the protection, is the fact that it's decentralized. It's kind of like if you put your money in a bank and they take $1 and put it in each bank around the world. Now, if somebody comes in and tries to take one of your dollars, if they try to take all your money, they need to go to all the banks, and it's impossible. So that's what decentralized finance does, is it spreads your money out throughout all these different nodes around the world. So it's very hard for anyone to steal it. And the real only way is if they get access to your seed phrase. So the problem is, if you lose that seed phrase, no one can help you. So this is a big limitation that, again, is being worked on. There's many people working on it, but if you're not really good with keeping things safe, like, what I tell people to do is put it in a safe. This, if you want to be even safer and you're scared of having something in your home, you could put it in a safety deposit box, right, in a bank. There's people that do that. I've heard stories that people put different parts of the phrases. So the way a normal phrase is about 12, it's about 12 to 20 words, depending on which wallet type you're using. There's people that'll put 5 words in different banks. So each of the 5 words go into different banks around the world. So if you go to one bank and you happen to get one bank, you don't have all the phrases. So again, there's people doing a bunch of different things. I tell people, especially when on Ledger, there's a metal password protector that has a lock. So you can buy the metal password. If you put your password in metal, so if there's a fire, if there's water damage, your password is there. And then you can lock it. So you still need the key to the lock. So if somebody finds that, there's all kind of levels. And then there's institutional grade level protection, which is people with guns watching those C phrases. So again, depending on how big you get, there's all levels of protection for people. But again, the main thing is, it's nobody you can call in decentralized finance yet. That's what we're building that stack. There's nobody you could talk to. You just have to do it and protect yourself, right? So that's where you need to understand that and get comfortable with that. And it's not that crazy. Again, I think people fear more money lost. There was a thing I saw where it said people fear losing. So if you had $1,000, you fear losing $500 as much as you're okay gaining $2,000. So what that means is you're more worried about losing $500 than making $2,000. That's just a mental way people are built. It's an emotional thing where you're more worried about losing than gaining, which is kind of illogical though, right? Like if you could put your money somewhere where you're gonna lose $500, but you have it's possible for you to lose $500, but you have the potential to gain 2,000. You're probably not likely to do that. You would rather keep it not in the place where you can lose the 500 because you're worried about losing the 500 instead of thinking about gaining the 2,000. That's a mental hurdle that, again, I'm trying to make content because it's just illogical. If you could put $500 somewhere and it's a risk, but it's not 100%, but you have the potential to make 2,000, 4,000, 5,000 off that same $500, we got to get to a place where people are okay doing that, because that is what decentralized finance is. And yes, losing the 500 would be your fault, though. It's not like you're losing the 500 for any other reason than your own ways of holding that seed phrase, or forgetting the seed phrase, or giving somebody access to your seed phrase. Those are really the main reasons you lose your money. So that's really on you, right? Like, so again, crypto goes up and down in price. So another big thing I think I want to make sure people understand, you see a lot of news about people losing money. Oh, this person bought this, now it's worth this. They lost that much money. So if, for instance, I bought Bitcoin when it was 60,000. Now it's worth 27,000 right now. I lost $40,000. Did I lose $40,000? This is where, like, the way the media portrays it, you did not lose that money unless you sold it when it's down. So if you had a house and the house on the up market is worth 500,000 and then the down market is worth 420, did you lose that money? You lost the current value of that, but you didn't lose it. If you wait till the market is back up and sell it, you probably are going to make money, right? But the way it's always talked about is, these people, see, we lost our money. You lost your money. Yes, on certain projects, if you bought certain projects that have no way of making it in the next 10, 20 years, yes, you lost money, because there's no way you're ever going to be able to sell it again at above what you bought it for. So yes, in that case, you did lose. But if you buy the staple projects, Bitcoin and Ethereum, and you believe they're going to be around for the next 20, 30, 50 years, which are written into the code, there's literally no way. The only way for those projects to not exist anymore is if every computer in the world stops working at the same time. Because still, if there's some computers working, then it's still alive, right? So how likely is that to happen? Yes, possible. But if that happened, digital currency is a much smaller problem than us figuring out how to survive, right? So in my, you know, I get angry when I see the way it's portrayed, because it's portrayed that way to scare people. Oh, you lost money. You didn't lose. Just because the price is down right now, if you didn't sell it, you didn't lose. If you sold it, yes, you lost. So that's up to you. If you feel like you believe Bitcoin and Ethereum are going to go to zero and never come back up ever, then yeah, you lost. So sell it and get out, and don't have to deal with those emotions. But the truth is, what happens, and this is what's happening right now, actually, is what I'm talking about it. The prices are going up. They're surging up. But every time in history that I've seen on the charts that the prices go up, they come down. So what happens is people FOMO, meaning fear of missing out. They're like, oh my God, it's going to go to $1 million. Let me put money in right now because it's up. It's up 35% in 2 weeks. But what I've seen happen too many times, and again, I don't know if that's what's going to happen right now. I feel like it is, but again, not financial advice. It always comes up, comes down, comes up, come down, comes up, come down. It never just goes straight up forever. So if you buy on the way up, it's 27,000. Let's say you bought today. Say you bought one Bitcoin today. It's 27,000. And then it comes back down to 15,000. Everybody's going to be like, oh, you lost money. You lost money. Again, that's short-term thinking. That's not investing. How long did you expect to hold that Bitcoin for when you bought it? If you expected to hold it for a few weeks, yes, you lost money because now you're going to sell it at 15,000 and you bought it at 27. If you expected it to hold it for 5 years, have you lost money? It's just like real estate. If during those 5 years, the prices come up and down, but in 5 years, the price is higher than when you paid, did you lose money? This is where it's like too short-term thinking. People treating it like gambling. Oh, last week you bought it, this week is down, you lost money. If you thought about it the same way people think about real estate, that's my hope for people to think about it the same way. Yes, it's not physical, you can't live in it, but when you buy it, think about the length of time you're willing to hold it. And if you don't sell it on the downs, did you lose money? And this is where, like, you see it on NFTs, you see it on certain coins, you see it on, they wrap everything into this, like, you lost money. But they don't really do that with other assets, right? Like, yes, stock, they do it with that. But again, the smart people who invest in stocks, they're not investing for 2 weeks. They're investing for years, decades. Did they lose money? When people lost Amazon, when Amazon went down 90% in the early 2000s, did the people that bought Amazon in the year 2000 lose money? They lost it, they sold it then. But right now, they're filthy rich if they held it. Took 20 years, but now Amazon's one of the top companies in the world. Yes, it's not guaranteed that Bitcoin and Ethereum will be the top cryptocurrencies in 10, 20 years, but I think it's pretty safe to say that they will be around and worth more than they are today in 20 years. How much more? Nobody knows. If it will be worth more at all, nobody knows. But the reason why I think it is because around the world, everybody just got the news that the banks don't work in a way that I bet most people thought they worked. So Bitcoin and Ethereum were created to work outside of those worlds and fix all those problems everybody just saw. Once the world understands that and start putting, even if everybody in the world bought like a little bit of each, it will be worth a lot more than it is today. And I believe that's going to happen. So, all right, what are the key advantages and disadvantages of traditional banks versus DeFi? I spoke about a few of them during this, but I'll just go over them again really quickly. Traditional value, the advantage to traditional is it is the real world connection right now. There's really no way yet. There's some ways, but they're very, very small amounts of paying for things in the real world with crypto. In some countries, they are. So, like in El Salvador, you can buy a sandwich on the street using Bitcoin. In parts of Africa, you can buy things using Bitcoin. Everywhere in the world, not yet, right? I do think it's coming. It's going to take some time. That is a big advantage, though, right? Like if you got money in this digital space, but you got to bring it through the old world to use it, that is a problem. But again, there are many, many, many people working on it, and it's going to get solved eventually. Technology takes time. The internet is only 30 years old. The mobile phone is like 15 years old. And now billions of people have one. This is the first device where billions of people have had it. And now this is what makes mobile apps and digital properties on a phone very scalable. There was never a time in the world where every single human being on the planet could buy stocks, could buy real estate. Right now, every single human in the world with a phone can buy crypto, right? Not everybody could buy American stocks. Not everybody can buy American real estate or real estate at all. Everybody, even if you have 50 cents, can buy crypto. The one asset that literally everybody on the planet has access to and makes enough to buy. I believe that's going to grow in value. That's just me, though. I could be wrong, not financial advice. Um, so for DeFi, I brought up the global access, the no, I won't say, I'm going to say the non racist component to the banking system where it's like if you're a certain race or gender, you may not get treated the same way. That is a huge deal. Loans alone. There's a line from Jay-Z. He says, they'll give you checks, but they'll never give you leverage. Right? What he's saying there is if you go into a bank, there's companies that will give you money, but they won't let you borrow off of that money. And that's how most rich people get rich, by leveraging the money they make. They don't spend the money they make, they leverage it to make it a lot more. So now every single person on the planet can do the same thing that the rich people get to do. That's powerful. And that's pretty much what DeFi was created to do. You could take the money you make, any amount you make, and leverage it to make more. Versus in the traditional world, you have to be filthy rich to do that and have good credit and have whatever. Okay, so how is DeFi's ecosystem evolving? All right, so this is good. The DeFi ecosystem is evolving because, even before what just happened with the banks, there was a push to create more on and off ramps that were easier for people to go from between banks, like not even have to go to a bank, like literally put your money straight onto these blockchains. It's expensive right now because, again, when it's early, it's expensive. But again, it's going to get cheaper. It's going to get easier everywhere in the world. And it will happen. Actually, Coinbase just said it. They say, you know what? America is making it difficult for us to push this innovation. We're going to go to other countries. If America doesn't want to be the leader, doesn't have to be the leader, we're going to take it to other countries, though. They created Coinbase Global, and they're going to start going to other countries and try to make it so you can bring your money straight onto the blockchain without having to worry about, laws and stuff like that. Because again, who's making sure that these laws don't come to pass? The banks. They're the ones lobbying to the powers that be to not allow crypto to flourish, because crypto is literally coming for their business. So of course they want to make you scared of it and make sure that it's not possible for most people to do it. I live in New York. In New York, they've pretty much blocked us from doing most of the things that people can do in other parts of this country with crypto. Right. But luckily I have multiple addresses that I could use. And that's why I was even able to learn a lot of this, because I wasn't locked into the New York laws. I was able to do things that people in New York couldn't do, even though I stay here. And that's really how I even came up with the retire bill strategy, because I was able to see things people in New York couldn't even see, which is crazy. If you think about it, the most richest places in the world, rich place in the world, America, New York is like number one city, most money. And we can't do things that other people can do with money. But of course, it's because the people with the most money don't want us to be able to do it, because then it affects their money. Right. So it is what it is. But no matter what, it can't be stopped. It's just a matter of time. All right. So what are potential risks and challenges associated with adopting DeFi over traditional banks? All right. So this is a big deal. The truth is, it's so new that we can't see the possible problems yet. I can tell you some of them that I have envisioned that if they happen, they would scare a lot of people. One, these big decentralized open source platforms get hacked. The reason why I think that won't happen, though, is, again, people around the world, the smartest developers around the world, want to create an open source way for money to move between anybody around the world. Yes, a hacker could come in, but unless that hacker is so much smarter than all other developers that don't want this to fail, that's the battle. And I'm betting on the people that want it to succeed. Yes, there could be one person that gets in there and does some shake some stuff up, but overall, over time, I can't see it. Wherever you're watching this, if you're watching this or hearing this on a phone, on a computer, you're running open source software and you don't even know it. All phones, all computers are running on open source software. These things have been being built for 30, 40 years. Now, we just created in the last 4 or 5 years the first open source money software. Bitcoin was the start of it, so I'll even give it more. 10, 15-ish years. First open source money software has been created. Right now, every computer, every server, almost every technology is run on open source software. And we just got the first open source money software. It's a matter of time before it's perfect and people can use it. We can build all kind of stuff on top of it. I'm building my platform on top of it. Just like Apple is built on top of open source software, Microsoft is built on open source software. Everything is built on open source software. So yes, there are risks right now that there could be hackers, or the fact that humans don't have the knowledge enough to protect themselves yet, right? They can easily be hacked. It's called social engineered, meaning it's not like they're hacking into the system and breaking the open source software. They're hacking into you. So one of the big things I've saw is people have been getting like fake PDFs. So you get an email and it's a fake PDF. It looks like it comes from like Amazon or something that you recognize, but the email is different. It's not Amazon. So when you click that PDF, you're basically giving access to your computer and your files to some hacker. And then they're waiting for you to put your seed phrase on your computer, or they're finding it. If you do store it on MetaMask instead of having a ledger, they find access to your server, to your seed phrase, then they go in. But again, that wasn't the decentralized platform. That wasn't the blockchain that got hacked. They hacked you on an individual level. And yes, it's a problem. But again, it's your fault, kind of, right? Again, you got to educate yourself on these things. And that's why I create this content, because I'm educating myself. And when I educate myself, I'm like, I know a lot of people don't know this. Let me create some type of content to make sure they know this. So the truth is, when you are hacked, most likely right now, it was in crypto. It was most likely because you did something. In the traditional finance world, they're hacking the databases of these banks. They're hacking the accounts. That has nothing to do with you. That's on the bank level. They are messing up the same way I'm talking about. So again, when you create your own decentralized finance, your own bank, you are in need of protecting your own assets. When you put it in a regular traditional bank, you're expecting them to. They have a bunch of things in place and they're not good enough either, but they do have insurances, and you can get insurances on the traditional finance side too. Again, it's what level of risk you're taking and what you want to pay for. You can pay for insurance on crypto. You're going to be paying, you can pay a percentage, 3%, 5% on the money you put in there, and they'll give you insurance. You lose it, they'll give you your money back. But again, do you want to do that? It's up to you. What I teach people is, they'll tell you, this is a big phrase that I hate when they say it, but I'm changing it. They say only invest what you're willing to lose. And what I say is only invest what you were going to use, right? So if you're going to pay a bill, invest a little bit more than that bill, pay the bill, and then invest the full amount of the money, right? So like, again, if I had $1,000 bill and I could bring in $1,400 into my bank, I bring in the $1,400, I borrow the 1,000, pay the bill. Now I can invest almost all of that $1,400. So yes, all right, I'm investing $400 more dollars, but this comes back to what I was saying before. I'm not worried about losing the 400 because I know I'm investing 1,400. So that 1,400 over years and years and years could turn into hundreds of thousands of dollars potentially, right? So if Bitcoin went to $1 million from where it is right now, what does that number look like? I'm not worried about losing the 400. I'm looking at gaining the 1,400, compounding over decades. And that is a very big deal. That wasn't possible till a year and a half, 2 years ago. So take advantage. How does regulatory environment impact traditional finance and decentralized finance? This is where we're at right now, where we don't know. This is where it seems like the government is going after crypto hard. Like they're looking to shut down the on and off ramps, and potentially they could say decentralized finance is illegal in America. They can't stop it everywhere in the world, though. And yes, they could block us from sending money to these platforms. They could, but that doesn't mean you can't create a bank account in another place and do it from another country. There's countries like Estonia, Malta, um, El Salvador, Bahamas. Yeah, I mean, it would suck, but it's possible. It's definitely going to be possible. There's no way any country could really stop it. If every single country said this is illegal, they still can't stop it. That's how that because it's code on the blockchain. Yes, it will become difficult to take the money out of that system, and that could be a way that they do stop it. But I can't see every single country in the world doing that. I could be wrong. Until then, head over to retireyourbills.com, take the free training, learn about everything I just spoke about, try it with $5, $50, $100, however much you feel comfortable doing. I've had people that started out with $10 that now are on to $15,000 a month. Imagine being able to invest $15,000 a month on bills that you were going to pay anyway. That is kind of crazy, right? And again, it sounds unbelievable, but again, it's 1000% possible. I do it every day. I have people doing it every day, and I just created a software to do it automatically. It's possible. I hope you take me up on learning how to do it, either through watching my content, because of course I'll be creating more and more content. There's videos everywhere of me showing you how to do this step by step. If you join my email list at miguelsanchez.world, I even put it in email in sections so you can see step one, step two, step three. If you join the class, retireyourbills.com, I help individually. We help people set up their banks. And then if you just want somebody to do it for you, a robot, join the Stack waitlist at stackit.ai. Hopefully you guys are not just watching this situation and letting it happen. And then basically after it happens, say, you know what, I'm going to do this now. Because the truth is, right now, we are proving that crypto is the future. If you think about what's happening with other banks, you really look at what's going on, it's just reinforcing the reason crypto was created in the first place. We have our money in a system that's not built for us. And when I say us, I mean the 99%. If you make a certain amount of money, you're considered the 1%. But most people on the planet do not make that amount of money because it's 1%, right? You need to be making almost $1 million a year to be considered 1%. Most people, I don't care what level you are, think they're richer than they really are. If you're one bad medical situation away from being poor, you are not 1%. You are as susceptible to all this stuff as anybody. You may just feel like you're better off, but technically you're not until you don't have to worry about your bills for the rest of your life. That's what the 1% are. They don't have to worry about paying a bill for the rest of their life. I don't know many people like that. And if you believe you're above doing any of this, I'm telling you, you're wrong. I've seen people who were really, really rich and not be as rich within their lifetime, right? I've known people that have made $10 million and been broke, right? And you see it in NBA, NFL, happens all the time. And most people are not making that kind of money. So if you have a job and pay bills, you could set yourself up by just paying your bills every month to be in a situation where that money grows to a point where you don't have to worry about paying them anymore. So again, thank you for watching or listening anywhere you listen. Please like, subscribe, give feedback. Thank you again. And I hope you take advantage of this decentralized finance opportunity and try it. All right. Have a good one. Bye.